It's like,
I don't know. But we're live and living color again.
oh, my bad.
I don't think that was caught, but I agree. I don't like Brussels sprouts either.
Yes.
I don't know, but we're and there we go. We're off to the races. Hey, gang, we are back. It's GP with bags today. No love for the JFDI, Nick. No, actually, it's all love. He's with the family, doing some Easter stuff. So mad respect on that, right? We love it when we're able to spend time with our family. So Nick, we miss you. We'll see you next week, but we're going to hold it down. I just hit the tweets everywhere, GP. See, look at me. I was all prepared to go. I've even posted it over at Charts for Charity, the YouTube stream. So we're just off and going. And when GP and I fired up the old Zoom a few minutes ago, I was just like, man, I think people who got shook out last week are going to wind up being sorry they did. Not that there aren't going to be more shakes coming, but I don't know. I just my spidey sense is tingling, and I feel like we're going to rip. And I don't mean like all of a sudden we're up 10% on the SPY or the Qs this week, but I think we're going to leave everyone in the dust who decided to get out and go into that big bear thesis that seems to be just a persistent permutation of so many on the FinTwat. GP.
Yeah. Can we talk about how sideways we've been and as the bearishness has increased?
Yeah, I mean, we can talk about 4 straight weeks of Bitcoin on a 4-week tight. I mean, we can talk about the Qs. We can talk about the SPY. Whatever, however you want to talk about being sideways and going up from here. Or going down from here. I don't think you're going to talk about going down from here, but whatever you feel like, brother, hit me off with it.
Well, let's let February 24th, 2022. Russia invades Ukraine.
That was
starting
right.
The new war, starting sparks of inflation.
Right there.
And the Qs hit a low of 318.26.
I'm going to put a little
April
upside down
7th,
smiley face.
2023, we are sitting at 318.06, a grand total of 20 cents down in 13 months. Can we stop talking about a downtrending market? Can we stop talking about a market that's on the verge of collapsing? We're sideways, right? Like, yep. Your macro thesis may ultimately be right. No one's arguing that. But
no one argued you harder than I did that we were in a downtrend.
I know. And so I hear you, but 13 months is not a downtrend. When the fuck do you figure it out that 13 months is not a downtrend, right? We've been sideways for 13 months, 20 cents down. In December, we were up 56 cents from June, right? Like we haven't changed much. Yes, there's stuff that's getting obliterated underneath. We're in the process of weeding out the garbage, all the fluff that 2020, 2021 brought to the markets, like these IPOs going nuts at like some ridiculous valuation. For you to ever catch a Microsoft type percentage move by holding 30 years, you would need it to be a $17 trillion market cap. None of it made sense. And then you had the SPACs and all that other stuff. So we're working through all of that nonsense. And we've been sideways for 13 months. Stop drawing head and shoulders, stop drawing downtrends. We've been sideways for 13 months. We're still digesting the information. We could be sideways for another 13 months. We could be sideways for another 13 years. We don't know, right? But we're sideways as of now.
That's the lost decade theory, right?
Yeah.
I brought that up a few months ago.
Yep. And it's something that I pondered back in May 2021. Are we in for 13 years, right? And and it's possible. Right now, the technical picture doesn't necessarily showcase it, but the macro picture can showcase it. There's a lot, right? The Fed is kind of trapped in whatever weird cycle that they're in. Like they still need to, I don't even know anymore what their mandate is, but it's something, right? But we've been sideways for 13 months.
And we're holding this pivot still. I mean, I know somebody's going to say, well, the pivot's higher. Well, you can make it up there, but it doesn't coincide with these lows, right? So the pivot's closer to here than it is here. I mean, will we all be happy when we take out
334.86 or something?
330, 334? Yes. Happy days are here again. Woohoo. But we are right on the pivot. We're holding the pivot. It's not the world is coming to an end here. And yeah, there's a whole lot of macro stuff hitting the tape this week. I think we have Fed minutes and CPI, if I'm not wrong. I might be wrong. Is it CPI?
CPI is Wednesday, yep.
So there's a lot of things that are out there. You know, you've got everyone, including my barber, preparing for a recession, yet buying a new house last week, and he's never been busier. And yeah, that's anecdotal, but I do think we've been talking about a recession for longer than we've talking about a war in Ukraine. So if we haven't already gone through a recession, do I think we're going to test new lows in the next couple weeks? Probably not. Anyway.
Yeah, and I think the data continue personally, the data to me, the charts is what I'm talking about, right?
Yeah.
Continues to stack in the favor of a bullish outcome. And if we start to see that break, then yeah, it's time to get cautious. But as of now, this is what a market looks like without the free money spigot from the Fed, right? It's working through its channels, it's basing, it's digesting week by week more binary events of news and culminating as a whole, right? So I've talked about this before, which is, okay, so 2020 was a big pull forward demand. And post 2020, we've been kind of consolidating, right? We've been pretty much sideways on the cues since Biden got elected, right? We've been sideways on a lot of names that are good companies that have growth, right? Like Netflix as an example, it's where it was in 2018, right? And their EPS has grown by 23x since then, and their revenue has grown by three and a half times, right? In the last 6 years. And it's been essentially 3 inside quarters inside that massive bar down from last year. There's a lot to go through, right? And I think what my eyes continue to be on is financials, and financials holding the 2008 base breakout and continuing to hold above there is on a week-to-week closing basis. That number is $30.98. And it has held for 4 straight weeks. The worst banking crisis on, remember, real assets since 2008, right? And it has continued to hold and hold and hold. So if this breaks down, then the market will most likely break down with it, right? So this is one I'm watching pretty extensively to see where it closes, right? Because this, I think, is important. This is a 13-year base breakout retest in the financials. Financials, you can say, are not really financials because 15% of the XLF is Buffett. But they're still considered by most the financials, and that's one of the cases for me that remains. Well, you break that 30.98 on a closing basis, then you're going to have a lot more stuff to worry about. But until that happens,
and when you look at market rotation, right, and you go from the industrials and the materials, and you start the cycle back around, one of the first things that come up, obviously, on the rise is technology, but also something that a lot of people don't realize is financials are usually tied to that first wave in the rotation. And
yep.
I'm kind of surprised, honestly, that one, that we're still, given all the news and everything that's happened over the past few weeks, that we're holding where we're holding. But technology hasn't exactly slowed down, right? You look at, I mean, before we started, we were talking about Amazon, which I really liked, and I mentioned that last week. But you've got Apple. What has Apple done? Apple's just continued to go on a tear.
And Apple's actually higher than the sideways Qs, right? To be honest,
the biggest market, cap in the world here. You look at Microsoft. What has Mr. Softy done? Nothing but just rocket ship higher. Maybe the best Thursday of every stock in the market, up to 291. A level that it hasn't seen since this August, right? Where everybody's saying that we got to clear. And that doesn't mean that it shoots on past it. It could fail here. Just, I mean, we're open-minded around here. But there are a lot of things that just doesn't seem to add up when I look at the bearish thesis right now. And I think all it's going to need is for the financials to pony up a little bit, and along with tech, like you've got that market rotation on and popping.
Yep. I think so I kept hearing there's only 7 stocks leading us up, right? And okay, maybe the 7 stocks are the reason we are green year to date, but of the 503 stocks in the S&P 500, 278 are green for the year. 225 are red for the year. Of the 225, 31% weighting is considered red, and the other 69% is green for the year, right? So when you're talking about breadth participation, you have 69% of the stocks in the S&P green for the year. Maybe they're not responsible for the 7% gain in the S&P, but they're still green for the year. And the ones that are kind of lagging are not too far behind. United Healthcare that have decent weightings, right? So like I did the chart. So United Healthcare is a 1.4% weighting. It is down 3.2% for the year. Johnson & Johnson is a 1.25 weighting. It's down 6.5% for the year. JP Morgan is a little over a 1% weighting in the S&P, and it's down all of the bearish news. JP Morgan is only down 5% for the year. Isn't that odd to you?
Yeah, yes, it is. And I just posted the sector rotation chart on StockTwits. Doesn't mean a recession can't happen. Doesn't mean there can't be a bull market in a full-blown recession. The market usually bottoms before that happens, historically. So we'll see. Like I can't be dismissive of either case, but again, the bearish thesis currently just makes the least sense to me.
Yeah, and if it changes, then we change with it. But
exactly.
As of now, you're going to get the gyrations. You're going to get 5 to 10% pullbacks in every type of market, whether it's sideways or whether it's up, whether it's down. It's just standard, right?
Of course.
So I'm not talking about you've timed it perfectly on your zero DTEs because you're the best trader alive. I'm just talking about overall market direction. I think that's the important time frame for me to understand here, right? And I like doing big picture stuff because it gives me a concept of where stuff is going, right? And the best is the correlation is if you hike rates, the markets break. But I posted a chart about that too, right?
Congrats to the zero DTE traders. God bless them.
But I posted a chart about that. In a uptrending rate market from the 70s all the way to early 2000, we had multiple recessions while rates continued their trajectory higher, right? And since 2000, rates have been on a downward track, and we've had multiple recessions within the downward track too, right? In the trend, if you're talking about long-term trends. So recessions happen in ups and down markets. And the biggest concern last year, while why things were really bad was the pace of rate hikes, which we all know has already slowed. The market can absorb, and that's what we're seeing here, is the market is absorbing the rate hikes and watching for things to break. If nothing breaks, like we've talked about this many times, without the next catalyst, you can't get a 60% move down. You're going to need it. And any catalyst you can think of is not going to be the catalyst that's going to cause it.
Right.
Right. That's my thought process in general. It's going to be something out of left field. No one really expected things to break in 2008. And then they broke all of a sudden, right? No one cared about COVID, even though it was around for 2 or 3 months until Feb OpEx, right? Until flows changed ultimately.
Absolutely. And there weren't a lot of people that hit the 2008 sweet spot. I mean, we know Dr. Burry did well in that, and that's his claim to fame, right?
Eventually, but not initially.
Right. No, and that's getting to my point is you say something enough times, eventually you're going to be right. And I feel like coming back from basically around the Thanksgiving time period, bears have just continued to double down and double down and double down and double down and double down. And now we're in April. And it's like, well, yeah, you just keep rolling that ball out there. Eventually you're going to be right one day. Like that black swan event's going to happen. That's what it's going to take to get you down to your price point. And it comes back to what we've, consistently said is you trade the market you have, not the one you want.
Yep. And this reminds me of 2021 quite often, right? It's while the indices were grinding higher, everything was getting destroyed outside of the the 4 horsemen or the 7 horsemen, right? And on that,
take a drink, GP. You'll be all right. Take a drink.
I mean, like on that, the narrative was the leadership, the breath is really light. We can't, like, this market can't sustain it, right? And it made sense. Everything was getting demolished, yet the markets were still grinding higher. And now the markets are not really grinding higher. Right? You can say they're higher off the October lows, but ultimately the same price where they were February. And now it's the same conversation. It's only the 7 horsemen leading. I don't know. There's a lot of talk about stuff, and as of now, the price action doesn't represent any of that stuff, bearish or bullish, to be honest. If I was thinking, I would be more bullish because the more things I'm looking at are starting to align, right? Financials holding that level, etc. But we're sideways, man. Like, we could be sideways for a long time. So
All right, we've gone into our 30-minute monologue of
Yes.
why we're not such bears currently. Let's talk about some things we like and things we don't like. We normally leave this for a time at the end of the pod where we're quickly going through them. But since we have a little time tonight, I just want to go make some cases on stuff that I like and why that I like them, and stuff that I don't like and why I don't like them. So I'll give you a minute, GP, to think about it. I know one that you're going to like because you always like it. No, I don't know if that's the one you're going to call out. But I like Amazon so much right here. I might be Looney Tunes. I might be crazy, but this just seems to me almost like financials. It's just holding that pivot right there. Just holding on and holding on. I may never get that chance to buy at 85 again. And if I do, great. If I don't, it is what it is. But this just screams at me that it wants to rip, and probably rip right through this 50 EMA right here at 110 and just keep going. And I'm looking for, like, I don't know, 140, 145. I'm looking for it up here to get back into this base and this higher pivot eventually. It just looks like it wants to go. The RSI has stayed cool, right? It's just above 50 right now. We've experienced higher lows. We don't have a lower low yet. And I think once it breaks through this like 105 area, like, I don't think that there's much going to stop it. I just feel like it's going to go. Not in a straight line, obviously, but continual move higher, I guess is what I'm saying. And this is not financial advice. This is just my own interpretation of how I'm seeing the charts line up. I don't know. Call me crazy. I don't know if you like Amazon. I know you're long Amazon, but I don't know how much you like it, GP.
I'm it's been so disrespected for so long. I do like it. It's hard to trust anything out of it. At some point, I think in the near future, you're going to see a pretty big week out of it, whether it's this week or next week or post earnings.
Yeah, earnings is in 2 weeks from 17 days.
Yeah, it could be into earnings, it could be after earnings. I don't know when it's going to happen, but I think it's been disrespected for so long. It is so far under every kind of weekly moving average. It is nuts, right?
Yeah.
Like it is. People right now talk about Nvidia being so
and
far
on the
above
daily,
the
it's holding all those moving averages. Like, that's what you want to see. This is a completely bullish crossover on the daily chart. The weekly chart it's holding the 9 and the 21. That 50 is up here at 102.
The 200 week is at 130. It is still 30% below the weekly 200 moving average, right? Like, this is Amazon. This is not Fubo. This is not some SPAC.
I'm not saying that Amazon is going to do this, but I look at Alibaba, right? When Baba split up and said, all right, we're going to be 6 different companies. Look at how it took off. And boy, I wish I just bought those 85s instead of trying to sell to open on those puts, because that was a nice win on Alibaba that we'd been chomping at the bit for a minute. And
yeah, dude, I haven't sold a
very similar, very, very similar, not just chart, but what they got going on business wise. And I don't know. I just think it's Amazon's turn.
Yeah, and look at that Baba chart you just posted. Inside week, right at like it. This is just. I'm still long Baba. into my September 120s. I'm hoping I can sell those when Bubba hits 180. But that's my personal opinion. I think that news was huge to split out and unlock value. I think it's massive news. So waiting for the theme to kind of play out outside of day-to-day interactions. I like Amazon. I do. It's just really hard to pinpoint the week where it's going to go back.
Yeah. I'm not saying YOLO weeklies on Amazon. I'm just saying like the pump is being primed. It is ready to go.
Yeah.
We've fueled up the bus.
Yeah, and I think respectively, Apple and Microsoft, even Google had its move. Apple and Microsoft are potential resistance points, right? So if it's just the 7 horsemen leading up, maybe those horsemen rotate, right, from Apple to Amazon and from Microsoft to maybe Netflix, right? Because their earnings are coming up, so people are going to buy the run up into earnings or whatever the case may be, right? Whereas Microsoft, Apple have already run up into earnings, so to speak.
All right. So what do you like? I gave Amazon and why I liked Amazon.
So I was gonna say I like Roku a lot.
Still on the Roku train.
So this is flagging for 7-8 weeks, right at the 50-week moving average. And it's been 7 inside weeks. Hold on, I'm just pulling it up. 1, 2, 3, 4, 5, 6, 7 inside weeks in a really tight closing range, right? So week 1 it closed at 62, and then 65, and then 60, and then 64. And so it's not a week tight pattern because it's more than the 1.5 or 2% fluctuations, but it's still a tight pattern here. And volume has been increasing on the moves up, but not so much on the volume on the moves down. And so I really like where this can go here, especially with the Netflix earnings coming up in 7 days or 8 days. If you're looking back at April, it's a similar kind of April 2020, sorry. There's a different time because it was unlimited QE, but Roku had a similar kind of sideways pattern and then breakout, right? So it's one I'm watching here. I like how it's resilient. It keeps getting sold off at 66, but keeps getting bought anywhere below 60, right? And I like what this has to offer here.
Yeah, I mean, I see what you're saying. I mean, I was once very long Roku, and it did very well for me. Just don't know if I want to get back in it, but technically, I see what you're saying. Like a run up into the 80s or 90 even.
Yeah, I have potentially to 98, but that's going to be a long shot ultimately because that's a big percentage move without the unlimited QE.
Yeah.
But at least towards that 76 area, that candle high that it can break out. But it's flagging while holding the weekly 21, while right under the 50. It's one of my favorite types of setups from bull markets. So if this works out, it's more indications to me that the bull market did essentially start in October, right?
So let's I'm curious to how you play this. You mentioned this candle. So 76.62 was the high. Just personally, would you likely be a seller into 76, or would you sell a piece of it thinking it blows through, and if it didn't, sell the rest if it fell below 76? How would you play that, GP?
So I'll tell you exactly how I played it. If you
No, I'm talking you're long currently, how you would be playing it, not
but even short term, how I oh wait, sorry, go ahead.
Yeah, no, not off of this candle, but you're using this candle as a reference, right? You're expecting at least 76. So let's say 76 happens in the next couple of weeks, right? And that puts you somewhere around here. Do you sell most of your position coming into 76? You sell part of your position coming into 76, thinking it might go above that and then lighten as it does, and maybe have a trailing stop, that if it came back to 76, you just unload the rest. How would you play that coming into that candle, since you brought it up?
So for me, two prongs, right? So I have short term, like 1 to 2 weeks out, and then 3 to 4 months out, right, on the swing. So the short terms coming into 76, I would be in a position where my calls would be completely neutral, right? Because I think it breaks through 76 this time, personally. So on its way to, I think on its way to about 90, right, or so. That's my first kind of target. So
Yeah.
on that move to 76, I'd be selling in batches to make sure that my capital plus whatever gains to make sure that it's a green trade no matter what happens for the rest of the next few weeks, right? That if I put in $500 in the trade, then I would make sure that I take out 600 or 700, right? And then let the rest
You
ride.
cover your trade plus some and let it ride.
Yeah, and then just let it flow out. That's how I trade in general, because I've been in too many positions where I get to miss out on the rest of the move because I just take it out there. And sometimes it works, sometimes it doesn't. It's not an art or a science. But if it feels like it's failing pretty bad, like the volume comes in pretty heavy at that 76 level, I may even take it off. So it's how it looks going into that level, right? If it still looks pretty kind of coiled and ready to move even higher from 76, then I would probably trim and trail, right? And then the June to like September timeframe calls, if you have those, I would wait till it gets to the 76. If it starts to fail it, then I would take maybe 10% off, 20% off, right? And not the whole position to make sure it's a green trade, because I still have months to let this kind of bull pattern finish out. So that's the way I would handle it. But so like on the daily view of Roku, you're also gonna, in the next couple of days, I bought with the test right into the 50 SMA here. And you have the 50 and the 200 about to cross as well, right? So typically on those types of, you can see it on the cues, when the 50 and the 200 cross, it was a down move into the 200, into the 50 or 200 day, and then took off for like 10%, right? So similar concept here is that it's on the verge. This happens quite often, is on the verge of these 50, 200 crosses, you have a down move, reflexive down move, and then a rip higher, right? It's the shake and bake, so to speak. So that's what I like about it too on the daily, is it had that move down versus the breakout, right? So you give an opportunity to get in on a cheaper basis to see if it works out. It's a probability thing. So you have the 50 and the 200 about to cross as well. So there's a lot of stuff I like about this. From a week, I start usually with the weekly, right, versus the monthly,
right?
And so from a weekly time frame, it looks pretty coiled and ready to move one way or another. And based on where the daily is, it's a bullish setup for me. So, right, and then you have the monthly MACD about to cross up too. That's another, that like it's lined up on so many time frames that this just looks like it's about the beast.
That's really great insight. On short-term options, one thing that I tend to do, and I learned this from Nasty Nate, shout out Nate. The human mind, we like to do things evenly, and we like to find patterns, and basically our mind fools ourselves from getting out of a trade too early or holding on into a trade too long. And one thing that Nate didn't say this exactly, but he trades on his short-term trades usually in multiples of 3. right? So if I buy 3 options of whatever, right, 3 calls for instance, I can't split that in half, right? I have to be in profit. If the trade goes, let's say 20% in a day, I have to trade 2 of them to be in profit, right? So you basically have 1 remaining. And that's one thing that always really stuck with me on using multiples of 3 is now I'm not trying to just be neutral. It forces you to, you got to take profit, right? And I think that's a good practice to have, is it forces you to take profit. And I always like trading in those multiples of 3 just so I can't. Obviously, if I had 6 of them, then I could trade out 3 of them, but I try not to do that. I try to keep it in mind of, all right, I'm moving 2/3 of my position out, or at least whatever that next step of half. If I've got 5 of them, it's getting out of 3 of them, right? Whatever that one step beyond half is, closer to 2/3, that's how I'm trying to move out. So I just think that was really insightful, GP. Thank you.
No problem.
So I got a whole lot of shade last week from some random person on gold. And I'm not saying gold's done. I'm not going to use gold as my not great trade. But it comes back to what we've been saying for months now. You may as well wait for it to take out all-time highs. And I bring this up because top-down control via lefty right lies, who's in our chat, brought up gold. And I just wanted to look at the chart and got a triple top here. It's not a bad thing. But I would be okay for it to go a little higher if I wanted to get in gold. Curious on your take on gold right now, GP.
It's a very crowded trade. Doesn't mean it can't work, but literally everyone's seeing the same gold chart. The cup and handle that I posted, I think 3 years ago or 2 years ago, it's still the cup and handle. Is all I gotta say, right?
Yeah. It hasn't broken out.
And what I've found is the longer that patterns go, right, cups and handles or whatever you want to talk about, the more likely they aren't the pattern that you're thinking about. And if it breaks out here, great, you're right. You were right about the cup and handle, but it's not. This is not a cup and handle. You don't have these straight moves down when it tries to break out of the cup, down from, what was it, in 2020 March, from 2100 all the way to 1600. That doesn't happen in a cup and handle. That's when it broke, right? So it's not a cup anymore.
I'm not a gold hater.
Yeah.
I just think if you're going to wait for the breakout, wait for the breakout.
I think
if you were in down here, right, in the low 150s or 160s, congratulations. Bravo, anchors away, our guy. He's been chomping on gold for a while, but it's a crowded trade.
It's also a bear flag on the week, but whatever.
All right. I just wanted to touch on gold because, hey, top down, this is the first time I think he's been in the chat, unless he's got a different name. So just wanted to give him some love.
I think the gold trade that you're talking about it hasn't changed. Wait for the all-time high breakout. At this point, you're 70 points away. Save yourself the frustration. If it gets back to 1600, definitely viable at that point, but you got to see if it holds ultimately.
And you guys know I've hated on everything healthcare for a while, but what a week by UNH. I mean, wow, coming into earnings, or I think earnings is this week. Just a big move there by UNH. And I'm not going to go out and just say how much I still dislike Boeing, but Boeing is still the trade that I don't like. And I'm going to be on this. Watch Boeing finally make a mockery out of me, out of how much trash I've talked about Boeing for the last month on how I'm expecting it to break down. But I'm a realist, right? Like I live and die by RSI. It is a lagging indicator, but everything is saying this still has plenty of room to roll over. And the stochastic still not in a great spot. The RSI is still trending down, but yet price is higher. That's a negative divergence. So I'm still on the I don't like Boeing trade. It is holding those moving averages, and that's to be watched. So we'll see how Boeing goes, but not a fan. GP, you've mentioned I don't know how many times that you don't like the way the share structure of the company is. So I don't. Can it go to 250? Sure. Do I think it's going to? Not really. I think 186 is more likely than 250 right now.
Yeah, and again, if we have an all tides rise market, everything can move up. Doesn't mean it makes any sense. I think the one that became a very big popular, the canary in the coal mine this week. Did you see that, Bags? Do you know what I'm talking about?
Speak on it.
Costco. Costco reported its first down quarter in, I think, a couple of years.
And we said how much we liked Costco last week.
Right.
After all that
look at the price action. Look at the price action, though, right? It didn't react well. It was down 3%. It had a bigger bar when it in back last year than it did on negative sales. Right? Negative growth or whatever you want to call it. To me, this is something that people are now talking about, the canary in the coal mine, and Costco is one of the best companies run out there. And if they were really worried about Costco and its declining sales, why isn't this candle look like the one that we had last year? Right? It's not even close. When have you known Wall Street to ever not sell the crap out of something on the slightest bit of negative news?
Yep. Well, it got sold, but it didn't get sold that bad.
One of the lowest weekly volumes on a sell.
I mean,
since this started selling.
Really, that bar right there is people buying it up. Right? Like, I mean, that's exactly what Thursday's bar is.
Yeah, and I guess that's my whole point here, right? Like, your canary in the coal mine is the price action doesn't fit that. It's definitely a concern, right? I'm not saying it's not an issue, but as of Friday, when they reported negatives, Thursday when they reported negative sales, Wednesday after hours, you would have expected a death candle. At least I would have.
Yeah. I mean, that it was still down 2% for Friday, but it got balled up. I mean, it was down another $10 nearly. So I still like the setup. Still coiled. Look how tight that is.
Yeah.
I mean,
and right at the trend line, literally right into the trend line. It's not even funny. It's like that trend line from Magic. It's insane.
No, all it's going to take really is to say, okay, we've increased membership by $5, right?
Yep.
Like, it's all it's going to take. It's kind of a no-brainer. I'm not saying that they will increase membership by $5, but that spins a whole new dynamic on the chart if something like that were to happen.
Yeah. And so I think that's there's a lot of stuff that's like, okay, I hear you, your macro thesis is not incorrect. There's a lot of things to be concerned about, but so far the price action and a lot of things is not suggesting that stuff matters. Maybe it matters tomorrow, maybe it matters Wednesday, maybe it matters next week. I don't know when or if it's going to matter, but to me, when you have a crisis, right, and you have declining sales, SIVB chart is what I expect to happen to things, not down 2.5% or whatever it was.
Top Down gave some great insight here. He said, in my humble opinion, what you want to wait for after a drop like that is follow through volume. So an initial volume spike, as we pointed out, then some consolidation, then some more volume. I couldn't agree more. That is eloquently put.
Yeah. Every candle needs confirmation, right? Whether you're on the 1
Yep.
minute, 5 minute, weekly, whatever it is.
Yeah, we're not saying Thursday's buy up from being 2% down in and of itself is, the final bell that's going to save, right, the chart or save higher prices. But yeah, you always want to see some follow through.
Yep.
We do. Did you say the one you didn't like, GP? Did you say what you didn't like?
What I don't like, I think everyone already knows, but that doesn't mean I'm necessarily bearish long term, right? Which is energy. Energy
We
project.
made it 54 minutes without talking about energy.
I know, but you asked me a question. What do you want from me?
Yeah. You want to talk
and
about
then-
oil, or do you want to talk about XLE?
I think there's a potential that those two can diverge now, right? For the last year, oil has been getting smoked and XLE has just been sideways to up. So it's possible that oil continues to go incrementally higher, but XLE, the energy names, tend to get sold a bit more, right? It rejected the declining weekly 21 or 20 week average. Yeah.
Who was it? The Exxon was
Exxon's potentially buying PDX.
Yeah.
No, PTX.
PTX.
I think no Pioneer.
Is it Pioneer?
Yeah. PXD.
PXD. Yeah, we don't
Jesus
know.
Christ, we'll get there.
PXD. There we go. Yep.
But that to me doesn't seem bullish, right? To me, why would you if oil was bullish, why would you need to buy growth?
Oh.
But that's me. The consolidation. I don't necessarily view consolidation in an industry space that's already dominated by ExxonMobil, to be that bullish. But I could be wrong.
All right, we got a question from Hari Krishna. Who wants to know about Enphase. I mean, it's not First Solar, so I'll start there. GP, I think you've touched on EMPH in the past, right? Not one that is your favorite of the group.
No, like First Solar obviously is my favorite because the fundamentals actually look pretty good. Yeah, EMPH that's not a great weekly bar, to be honest. And on the daily, it looks like it's about to roll over. It did have a nice wick at the end of the day on Friday.
Yeah, the daily definitely looks worse than the weekly, but the weekly doesn't look great.
Yeah, so to me, it's like you have a red candle, two green candles, and another red candle. So you have potential reversal pattern off the two green candles, which got ultimately rejected on the weekly. So your line in the sand, if you're looking at this on a month-to-month basis, is prior month's lows. If we break that, as you can see, we've broken it 4 months in a row.
Not a good sign.
Yeah. Then it's probably going to that 15-month moving average or so.
I mean, what I will say is that it has fought off this monthly 50 before it's gotten down there each time. But there isn't a sign that this doesn't line up with those other low wicks right now.
Yeah.
It's still early in the month. We can see. Excuse me. But not the best look. I mean, for me, I would probably just stick with First Solar or go with TAN, which I also don't think looks so great right now.
Yeah, I think this monthly candle is important, right? If it takes out prior month's highs or lows is where you would either enter a long or a short, in my opinion.
Yeah.
It's kind of in no man's land.
Yeah. It's been a wild ride for ENPH holders. That's for sure. Like you can get some pretty volatile moves in that stock. So the Nest asks for INMD in mode. I know nothing about in mode. I mean, it looks okay. Stoke trend a little hot. RSI looks good on the daily. Looks like it wants a bullish crossover down here on the weekly. I mean, it looks okay. I don't have a position here, so I would probably wait for a breakout of like this 38-ish or so if I wanted to get in. But it looks okay. I've seen worse charts, but not something I personally would be ready to just jump all over.
Yeah, there's too much technical damage on this chart.
I don't know anything about it other than this huge dump.
I'm just looking at it right now as we're talking. It is in a basing pattern.
78%, 78% from high to low.
There's decent accumulation, so I think anytime it gets to like the 30 level, you're probably in a good spot to buy.
Yeah, volume's been okay. Yeah, I mean it's basing. It's not the worst thing I've seen, but not something for me to be excited about.
It's in a place where you can't really make a decision on up or down, right?
And 3M was the other one. I mean, this looks like a house of pain to me. Obviously, I'm aware of 3M, the company, but yeah, this doesn't look great.
I hope you're long from a long time ago, because the last couple of years has been painful for this one.
It's been tough.
I think so. If you're looking
about trying to identify a bottom, right? If you're out there bottom fishing, lows can keep going lower, and you got to be able to find the place where it is creating that base. And it's hard to say over the course of, what is this, 16 bars that's a base on a stock that has fallen from, I mean, what is this, 2018?
It's below COVID lows.
So, I mean,
right, it's below COVID lows. That tells you all you need to do in this point. But ultimately, like if you're looking at this chart, in 1, 2, 3, 4, 5, 4 straight months, it's made new lows, right? So you want to see this stop making new lows on a month-to-month basis.
Yeah,
that's your first tip, right? In terms of when to enter. This doesn't make any sense. So even if it makes a new low by a couple of pennies, it's something to watch, right? Because the couple of pennies could be a prelude to couple dollars, couple more dollars, whatever.
Yeah.
Or could be the test of the supply zone and then the reversal higher, right? So
no offense, the Nest. We don't really particularly like these for us. We don't know if you are long, if you are short, if you're in calls or puts or whatever, but just from a chart perspective, not one that and it sounds like GP would be interested in. This is not financial advice. We don't know your situation. We're not licensed to give you advice. We're just breaking down the chart and why we don't like it.
Do me a favor to pull it up. Can you pull up the quarterly chart on M here, 3M?
I would love to.
Yeah.
There you
go.
Now
if you draw a trend line from that bottom there in 2009, just to the first red candle, the big red candle down in 2020, COVID, right? So just simple, right? I don't look at this chart very often, but that's your uptrend line. It tested it, bounced off of it, broke down below it, and then on the quarter, it made a new low, but then tried to reclaim the trend line and then failed. And then what did it do the following quarter? It made a new low, right? And we're sitting here right above the prior quarter's lows. So this is your kind of level to watch here, that if we break this level on the quarterly, it's probably going to go back into that base as Bags is identifying.
Yeah, I wouldn't touch it until it got to 90 if I were interested in making because that's kind of where we had a fake breakout right here, right? And then you lost it, and then it rallied and it tested that almost 3 straight weeks, and then it pushed through, but then it failed again, right? And then you see this test, and then it came back and it retested. It made this a pivot now, and then that's when it moved higher. So I wouldn't touch it until it at least tapped 90, probably. Just me.
Yeah, I just set an alert for 89.
There you go, GP. See, GP's interested at 89.
Yeah, well, it's just good to know, right?
12% pullback and he's in.
Yeah, I just set it for, actually I should change that to 90.29.
Top down is really giving some great words of wisdom here. It's always appealing to try to hit lows, and if you can park what you can afford to lose in it, then it's sometimes stuff like this is worth a swing. And I'm not saying 3M is worth a swing right here, but it's not a bad way of looking at things. All right, last one. We got to go. We're at the hour. TTD, the trade desk. I really like the trade desk. I've always liked the trade desk. Looks pretty good. Looks pretty solid. $60 right here. I mean, would have loved to got anything in the 40s. That would have been lovely. Yeah, I kind of like the way it looks. It's above all key EMAs on every time frame. No worries there. I mean, heck, if it pulled into 59, I might set an alert for 59.
Yeah, it's been sideways for a long time, right? So to me, this is if you're doing a trade and you're doing a short-term trade, 1 to 2 weeks to like a couple of months, I think this needs a bit more time. It's not on a weekly basis. It's not really in a place where, like, if you'd bought the test of the 50-week a couple weeks, a 50-day a couple weeks ago, yeah, that's an interesting one. But right now it's kind of in a territory where it's just chopping around.
GP doesn't like the volume.
No, actually, I like the accumulation. This chart has been on my radar for the last couple of months, but it's been sideways, right? So like it's hard for me to put on a trade conviction here, because I don't do a lot of day trades ultimately, or even like 1 to 3 day trades.
Well, you can only do 3 of those a week on your Robinhood account.
Exactly. But so for me, I like the swing trades. I like when it's a bit more cleaner. And to me, this is not clean. Doesn't mean it can't break out to like 90 tomorrow.
Hood with a little push, actually.
Yeah. But for me, any kind of trades here, you're fighting against a sideways tape.
Yeah. Agreed. One last look at crypto before we go. Flattish. 4-week tight.
We
Might
got
be 5-week tight.
We got to relink that crypto conversation from the FTX collapse, right? And people got to go back and listen to that, because I think that was a really important one.
Yeah.
Right. Well, it talks about the price action we're talking about here. You had one of the major exchanges on the verge of collapsing, yet the crypto space did not.
Yeah,
right?
It did not.
So it was your first, that was like November, right? I think. And that's kind of your first indication that things have changed, right? And you have potentially the end of like one of the second biggest exchange out there, and on fraud, not like just a bad mistake, but like fraud.
On
And
fraud almost made me want to say on God.
and it didn't collapse with it, right? So you already saw the sentiment divergence, and then the price kind of followed with that, right? A few months later. So it's just something to keep track. We've been tight for a really long time.
Yep. Yep.
But are we hitting 1 million in like 90 days or 67 days now or something like that?
Excuse me. Somebody bet on that.
Yeah.
I saw. I don't know if we're going to 1 million that quickly, but I think 1 million is more likely than 0.
I don't think either one's likely, but
I didn't say one was going to happen. I just said I think 1 million is more likely than 0.
yes.
Anyway. All right, that's our hour. Thanks everyone. We appreciate all the new folks dropping in. Top down, you're welcome anytime. No, Wacky Louie. It's just been it's been a rough couple of weeks. We've got the preschool petri dish going on, and Dad's doing the best he can, and that's the reason why I'm coughing and stuff over here. So, but yeah, the pollen's not so bad either. But anyway, thanks everybody. Thanks Top Down for joining. That was awesome. You're welcome anytime. We appreciate everyone for stopping in. GP, as always, my brother, thank you. Nick, we miss you. We'll see you next week. Hopefully we have an awesome rallied, bulled up Nick next week when we come back. The Qs will be up 7, 8, 9%, and we'll just be, putting on our Dow 50,000 hats or something crazy. But yeah, it should be an exciting week. That's it. Thanks everyone.